Bitcoin finally crashed below $79,000. I warned you about this in every single video. My short opened at the absolute peak of 81,000 is playing out perfectly. Right now I have a huge profit. I already secured $2,000 of pure gain and moved my stop to break even. If I call the absolute peak and we are flying to 60,000, I will make a fortune. Take off your rose-colored glasses. I will show you why we will fall further. Daily market review, Thursday, May 14th. Let's start with charts and technicals. Look at the 4-hour time frame. The price perfectly hit the 0.618 Fibonacci level and dropped like a rock. The first obvious target at 79,000 has already been reached. The buy reaction there was pathetic. What is the most important thing? Funding became positive. The crowd believes this is just a dip and started aggressively buying. This is a fatal mistake. According to liquidation maps, it is clearly visible that from current prices down to 77,000, there is way more liquidity than above us up to 83,000. And if you look at the heat map, a huge magnet is burning there. The main liquidity has accumulated exactly at 77,000. There is no point for the market maker not to go there since we already dropped to 79. And most importantly, the $77,000 mark aligns perfectly with the 0.618 level on the Fibonacci grid. This is our main concrete target and my next partial take profit zone. If you don't have a position, there is a 4-hour imbalance above in the 80,000 zone. On a pullback there, you can try a short with a stop above 80,500. Now let's move to macroeconomics. The main trigger for yesterday's crash is the inflation disaster. US producer price inflation PPI broke 6%, a 3.5-year high. The core figure skyrocketed to 5.2% against a forecast of 4.3%. Why? Due to the war in Iran, oil flew into space, dragging fuel and logistics prices with it. Inflation is structural and sticky again. The market realized a terrifying truth. The Fed will not cut rates. There will be no cheap money again. And the stock market lives in illusions. The capitalization of Nvidia reached $5.5 trillion. One company is worth more than the GDP of every country in the world except the US and China. This is the classic final stage of a bubble, just like in the year 2000 before the dot-com crash. Add geopolitics to this. Trump flew to Beijing for the first time in 9 years. He brought Elon Musk and Tim Cook hoping for concessions. But Xi Jinping chose a hard line. He is blocking US deals and ignoring sanctions on Iranian oil. Analysts do not expect any breakthroughs. Uncertainty is only growing. And amid all of this, smart money is leaving crypto. The Coinbase Premium index went deep into the red. American institutions and ETF funds are selling Bitcoin faster than it is being bought on the global market. Traders who were sitting in unrealized profit started massively cashing out right at the test of the 200-day moving average. Institutions are leaving. The crowd is buying. I'm in a comfortable short. Are you in a long or a short right now? Let me know in the comments. Subscribe. We continue tomorrow.